Ahem. Ladies and gentlemen, esteemed colleagues and members of the board, today I, Tom Powell, have flown in from the moon to deliver an intro speech for the largest, the biggest FOMC of the entire year. You've chosen to tune in to Tom Crown, my esteemed colleague and very, very close friend, the original FOMC streamer. And today, the spice is coming. Thank you for joining us. We will be looking for the data. Somewhere the data will be found. And in just a few minutes, Chairman Powell himself will be joining us to speak and address the economy. Thank you, and I look forward to your remarks. Tom Powell, another rare Tom Powell sighting. The haters will say that we're the same person and you never see us in the same spot at the same time. That's bull. We're not the same person. That guy is a super member of the mega chair. You don't want to mess with that. That's levels you haven't even heard of. Anyway, guys, it's great to be back. It's 2024, and this is the first FOMC stream of the year. We've got some spicy things going on. Since the last ETF we have had, or since the last FOMC, we have had 9 Bitcoin ETFs start. We have seen an unprecedented outflow from GBTC. We have had many, many spicy events and some price action to match. Maybe not what we wanted. We have seen Bitcoin sell off during and after the ETF, but it does seem to be gaining a little bit of strength here. We only have 10 minutes until the interest rate decision is live. At 2 o'clock, it will be published to media journals, and at 2:30, we will see Chairman Powell himself join us. So what I'm going to do is set an alert that'll go off and scare me in just a few minutes. We're going to do as we always do. As Tom Powell said, we are the home of the FOMC stream. We were doing it first. Now everybody does it. That's okay. But I'm glad you tuned in and joined. If you could for me really quick, hype up the stream, put something in chat. Jordan Howell joining the patron. Right on, brother. Good timing. Really good timing. Check out the patron, but not right now. Not yet. We have more to do. Shout out to our sponsors, Lux, Algo, and Femex. Links in the video description below. Join the Discord, you know the deal. But here's what I need you to do. Smash the like, subscribe, enable notifications, share the stream, put something in chat, vote in the polls, hype it up, guys. We want to have a big stream. And I know when you get that engagement up, YouTube really does push this out to new people. So we have some stuff I want to go over really, really fast before that interest rate decision comes in. All crypto and market related. First, Gerben, DeVries. I might turn off this because my stream software is bugging out. It might be doing old ones. I don't know, man. But shout out to all the new patrons. I love it. We have our Patron Night Friday. Anyway, we talked about this on the last stream. We've talked about it for many streams. Bitcoin ETF flows. So as the ETF started, people very bullish, myself included, expecting flows of money into Bitcoin. And that is what we saw. GBTC, however, has been basically balancing out those inflows and at times eclipsing them. We have gone over what we should be looking for. I'm not going to go into it in depth, but this is coming true finally. We saw some of the biggest outflows last week on GBTC, and since then, we have seen those outflows begin to simmer off, getting smaller and smaller each day. We're going to follow this data for sure as it goes on. We just need the data. We're going to monitor the incoming data for changes and adjust accordingly, just like the Fed. But this is great. GBTC slowing down, that momentum slowing down. I can actually see a future where maybe they do adjust their fees and that bleeding might stop altogether. And that could lead to the opposite of what we've seen, a one-sided inflow into the market. That would be very spicy. Something of note, last thing of note, it is good to see this as well. Not only are GBTC conversions or outflows slowing, but we're starting to see the inflows pick up a little bit here. You can see this on this blue bar. Net BTC flows now in the positive here as ETFs are picking up more and more. Wonderful. That's good news. It's really good news, but we're not going to spend any more time on that because we don't have much. I want to get to the two really quick things. Very, very crypto related. Zero Hedge tweeted this earlier. I know a bunch of people probably tweeted it since. FTX expects to pay crypto customers in full in the bankruptcy liquidation. Anybody have this on their bingo card? Zero Hedge speculates that this may lead to no more GBT selling or Bitcoin shorting via FTX, and that's a logical conclusion. Time will tell, especially as we just looked at the GBTC and ETF flows that might already be happening. But this is interesting because what the hell? Is this essentially... So FTX is going to repay customers at the value in November of 2022 in the crash. So it's like Bitcoin at like 16, 17K, all of these things really low. So are they really only able to do this because the price went up? That kind of seems sus, doesn't it? Kind of seems like, I don't know, maybe that was their plan. Maybe I'm just tinfoil hatting there, but that seems very odd. Those of us joining for the first time, I have one or two more quick things, but I do want to update on the format of this stream. In front of you, we have Bitcoin, the dollar, gold, and stocks. We can switch these up as the stream goes, but you will notice two horizontal lines. The first one's at 2, the next is at 2:30. The first one being the interest rate decision being in, and the second being Powell begins his speech, or chirpow. Speaking of which, let me get a chirpow in chat. We need some chirpows in chat. Hype it up. Use those emojis. Really quick reminders, as we always say, FOMCs are extremely volatile days. I tend to close up my positions before, as we do see price action that whips out, stops out longs and shorts, and typically ends up right back where it was. This is really high volatility, very high risk trading. Please trade at your own caution, at your own risk. Know what you're doing. And let's throw this in here too. Typically, though, I think over the last few FOMCs, we have not seen this price action be so predictable. But we have seen Bitcoin trend in one direction. Then it tends to reverse after the interest rate decision, and then reverse again once Powell speaks. And typically it leaves you right back where you were. There's a little visual representation. The last few times it has not played as cleanly as it has in the past. But Bitcoin, no surprise here, trending up into this FOMC meeting, building some suspense, building some energy, making sure to keep it spicy for us. Next up, last thing, we've got 6 minutes. Last thing, NYCB, the bank that I believe bought Silvergate. Remember Silvergate? The bank that was not insolvent? It wasn't insolvent until they seized it. That's NYCB, New York Community Bank Corp. Today, on the FOMC day, opened trading 42% down. During this day, and mind you, this is only a few hours of trading, 46%. Wild gap. They bought Silvergate. I would bet money that Silvergate, if they were still operating independently, I would bet their chart would not look like this. Pretty savage. Seeing this into an FOMC is really going to be interesting today. They consistently talk about the robustness and strength of banks. And well, is it normal for banks to dump 40, 44, 45%? I don't know. Maybe it isn't a robust, sound banking system, but it will be absolutely hot in the question and answer part. Speaking of which, Gina, if you're out there watching, and I know you are, baby, I hope you rip them a new one with these questions, man. I hope they open it with the robust statement, and then I hope Gina comes in and is just like, so, New York Community Bank Corp, Powell robusted. That'd be awesome. A man can dream. Notice me, Gina, I love you. Okay, those are pretty much all the things. This is spicy. The other stuff's spicy. I don't know, man. I'm just in the zone right now. Really, really last thing. Here's something that I feel everyone is looking for now. Everybody. They're looking for almost the exact same move. And this is that retracement from our low. We were looking for this almost as soon as this bottomed. We said, all right, 46, 45, 46. Now it seems everyone on Twitter, everyone on YouTube, all the people I watch who usually I don't think that they don't get it right most of the time and kind of maybe counter trade signals, all looking for this. And this is a little problematic because we were looking for it. Now I'm uncomfortable. Everybody's looking for it. It makes it, in my opinion, less likely to happen. I just can't see a reality where all those people that are wrong all the time are right. I want to shout out Crypto Jack. You guys might not know him. He used to stream. He's not streaming anymore. Got a big boy job. But I saw him talk about Wyckoff. I remember him talking about this in 2021 and 22. And this caught my eye as well. And I think that this Wyckoff distribution schematic, it isn't perfect, but it certainly is in line here. Basically, what we'd be looking for is this LPSY for a lower high and then kind of a bleeding, bouncing, trailing off sell-off. I was very much in the opinion in the beginning of the year, 48K, or even last year, 48K and then down. But now it seems like that's the crowded trade. I don't know, guys. I want to know what you're thinking, what you're feeling. I just want to throw this up. This is just everywhere. If you've seen this parroted all the time, and especially if you're new to crypto, you're going to find out that the more people have a consensus on any kind of price action move, the less likely it is to happen. I'm still looking for higher. I'm still bully. I'll always be bully. Last thing, we got like 60 seconds before the interest rate decision's in. Awesome. This channel coming back into play, proving its value to us. We followed this, I don't know, all the way since early December. Hit the 100 moving average. We were worried about the 50. The 50 acting as resistance and pushing price down is how we've seen many bear markets start on the day. However, today's candle, provided it closes up here, is looking really good. We're back above the 50. Yes, we kind of rejected from the bottom of this channel, but we're retesting it. We're not seeing that selling pressure that I might expect. I think traders could look to take a position with a long, basically with their stop just at 42.3 or a little lower under this low, and you're playing that 50 daily. If the 50 breaks again, you're out. If not, I would be looking up in that 46K range. All right, I want to keep going, but we don't have time. What I need everyone to do is to open up a browser right now. We got 2,500 viewers. Let's go. Let's go, fam. All right, open up a browser. Quick. We are going to do as we always do. Google for the interest rate decision, but it has to be published. Not yet. Anything published right now on the internet is not going to count. Let's do Fed interest rate decision. All right. What you can do is you go to tools anytime and go to like past hour or something. Still not ready. I'm going to pull up the clock. I can't pull up the clock. Oh, well. It is 1:59 and 30 seconds, guys. You have 30 seconds. Get your tabs up. Use Google, use Bing, use Yahoo, use Netscape Navigator. I don't know what you're using. Use it all. And what I want is when you find it, whoever finds it first, put it in chat. Name your source. Don't just say no interest rate change. We only have a few seconds, but to give a little context, there's like a 99% probability that there's no interest rate change. But we did have a bank looking weak today. We do have some very interesting stuff going on. So anything can happen. It is exactly 2 o'clock and 1 second right now, so we may be able to get it. Let's see. Fed interest rate decision. Let's do it this way. News today. 1 hour ago. It has to be in the last 60 seconds. Has to be. Energetic sense standing. Thank you, Stefan. I know I have been. No change. We got to have the source. Where's the source? Put it in chat. Hype it up. Get the chat moving. It's going to be spicy, man. It's not done. The spice is not done today. I'm not seeing it. No change. I mean, that's what we should assume. Let's see. FOMC funds rate, no change. No changes in. Not really a surprise to anybody, but sometimes it is. Sweet. No interest rate change. Let's zoom in on the dollar. Let's zoom in. Dollar picking up some love on this no interest rate decision. We're seeing gold take a pretty equal dive along with stocks down here. Let's see. Bitcoin hasn't gotten the memo yet. Still chilling, apparently. Nope, actually has a little candle. Dollar gaining strength. It looks like Bitcoin and gold and stocks all seeing red. The dollar being the favorite here, I guess. Being the love. Dang, that's a beautiful 5-minute candle. Look at this wick. Oh, wow. Let's take a peek here. Dollar not looking the strongest, but that candle is something not to ignore. I would have knocked that candle. Here we are. Back to the 4 hour. Let's see. On the day, interesting. This actually looks a lot like total crypto market cap on the week. These high wicks, sideways range, kind of hunting stops on the highs and the lows. Spicy. Let's see. Dollar coming back down, and we can guess that Bitcoin probably coming back up now, along with stocks and gold likely seeing a little bit of a bounce. S&P 500 still on a red candle. Gold moving green. Bitcoin moving green. Ooh, we got some spice. It's not over. This spice is not over. That's a beautiful candle, man. Beautiful. All right, we've got 20-ish minutes until Chirpow. What should we do? What I'm going to do, actually, is I'm going to move this forward. That didn't work. I'm going to move this backwards. There we go. And I'm going to make this just 3. 4 was too busy. I couldn't see the charts. Here we are. Dollar still holding strong in those gains, moving higher. Bitcoin moving higher, but stocks, interestingly, stocks are just down. Down, down, down. They're not, we aren't seeing an inverse correlation with stocks and dollar. Stock just going down. I mean, we can say dollar up, stocks down. But then you look at Bitcoin, you have that red candle, now you're on green. We're seeing three different movements here. The dollar gaining strength, stocks seemingly wavering, and Bitcoin in the middle. That actually has been a trend over the last, I'd say, year. Typically before that, we would see dollar up, everything else down, dollar down, everything else up. But we've been seeing kind of these mismatches where stocks or Bitcoin will go up, dollar will go down, and then one of them will just move sideways. I don't know what to make of it. I don't know what to make of it. That is a great candle on the dollar. Holy moly. Holy moly. We're going to come back to this in just a second. We have about 20 minutes, so we're going to do a little bit more of the infos. Let me see. Today, we had the Jupiter drop on Solana. Jupiter drop. I guess you got some of this if you were like a VC investor, seed, ICO, whatever investor, or if you traded on the Solana chain before a certain time. I did not get any. That's okay. If you guys did, sweet. Jupiter opened trading. Up here, this is actually not the whole chart. It actually traded to $2 somewhere. It's hard to find because there's already a Jupiter. One sec. Is this it? Nope, Bybit was late to list. Of course, MEXC being one of the first to list. Here we go. Qcoin's got it. Qcoin's got the chart. Jupiter opened up at a $2 billion market cap. It hit $2.10. I believe that was on the third minute of trading. It was able to sustain that price for roughly 3 minutes before falling. Before falling about 70%, let's call it 68%, and now settled up at 67.5. There's nowhere near enough chart data to be able to really do anything with this, but that's okay. We can still watch it. I tweeted earlier, and a lot of the haters probably not liking that tweet, but I said if I got this drop, I'd probably sell it. They didn't like that. Why? Guys, you know how I feel about airdrops in general. 99% of the airdrop things that advertise airdrops are just wallet draining scams. That's my main avoidance. But even before those, airdrops, in my experience in crypto, have just never held value long term. The only ones I can even think of that maybe did okay, let me say Uniswap. And Uniswap, I mean, I don't think it's done that much lately. But long term, here is my objection. It's not Jupiter, it's not Uniswap, it's not whatever. It's these coins are basically just being dropped on wallets, right? Those wallets did something. They accrued transaction fees, right? They kind of paid for this. Some of that value is there. But outside of that value, there's nothing. There's nothing. People got them for free. So what should they do, or what are they going to do? Well, they got these things for free. Let's say you get $1,000. You owe $1,000 in capital gains tax from the moment it started. From the moment it started trading or whatever at that value. If it goes down to nothing, you still owe that money. As income. This is just a risky position. If you got some for free, it's not a big deal, especially if it wasn't a lot. Do whatever you'd like. This could continue up. My main concern is just the kind of void of value in airdrops, not Jupe specific, and also the fact that it traded at a $2 billion market cap instantly. There was never $2 billion here. This is kind of my, I rant about this a lot. That market cap is mostly an illusion, right? So if Jupiter has 1 billion coins and it trades at $2, it's $2 billion market cap, but you only need to have one person buy one coin or any amount of coin for $2 to make that a $2 billion market cap. It's deceptive. There was never that money there. For it to go back to 2 billion would be surprising to me, but of course I've been wrong before. And again, I don't know anything about this. If this is the best thing you've ever seen and you're all in, man, good for you. I wish you luck. But I wouldn't touch it personally. Just exercise caution. The only thing we might be able to do is something like this, but this is not really great TA. We could say, all right, our retracements are down here. There you go. You got maybe some resistance at $1. Perfect. I'd say upside resistance $1. You have local support like 65. 32 cents is your 0.5, and your 618's at 20. That's it. I don't got much more on it. Two more charts quick. XRP, you might have seen my tweet, which also got people a little angry, guys. Charts are charts. Just because I trade something or buy something doesn't mean I believe in it or like it or whatever. You're welcome to. But XRP, last night I said in a tweet, I'm buying some XRP spot. I haven't done this since 2017. Overnight, I guess one of the founders or whoever's wallets were hacked for like 2 million, 200 million, 100 million, something like that. And we got a little wick down. I woke up and found this out. So I bought it like right here at 50 cents-ish. Woke up, I guess there was a wick to 48. That's not a huge impact. Kind of acting like we've seen XRP act over the last few years, maybe. Moving with the market, but on the downside moves, just finding support and ranging, not really dumping, just slowly building price. That's why I bought some. But after, I guess, the hack, here we are, that position's in green. I woke up and it was in green again, and I was like, well, that's lucky, I guess. This play certainly not going to be the shortest one, though you never know in trading. I do expect XRP to range sideways, but I think that this is a pretty nice kind of capitulation shakeout candle. I had no idea that hack was coming. And very, very pleased that it rebounded right away. I'll tell you what, that was not great. I do expect XRP to come back up to like 55 minimum in the next few weeks, but I don't know, man. I just had a vibe and I was like, let's go. I just feel like this is going to move soon. I just thought to the upside. That weekly move did fill your fair value gap on the week. That's a good sign right there. 48. It found support again for a higher low. Yeah. What silliness. What silliness, man. Like, I buy something last night, tweet about it. I haven't talked about this since 17. Wake up, there's a hack. But I'm still in the green, whatever. Ripple or XRP itself is not hacked. It was just someone's wallet, just to clarify. Last thing, and then we're going to talk to the chat for a little bit before Chairman Powell joins us live. I hope you guys are still smashing those likes and subscribes, sharing out the stream, hyping it up. I appreciate you. Tau. I don't remember when we placed this trade, but I'll say it was probably 18th-ish, maybe 17th, 16th, 15th-ish of January on Tau. Looking for a long to our $488 target, which we established all the way back here. When it broke out, we were looking for 285 to take profit and 488. And 488 is now on deck for Tau. On deck. Coming in at 480. I guess it's probably close enough. I'd say 500. Good, solid psychological number to look for. But what's next, man? I don't know. If Tau manages to break 500, do the same things we've been doing to get these numbers. 620, 809. That's pretty big. The $100 increment of Tau, I think, is a little confusing. The unit bias is pretty bad when things like 100, I think, because this seems like it's gone up a crazy, crazy amount, and it has gone up. I'm not trying to cut that, I'm not trying to cut that down, but from its previous high at 119, its move to 500 is not even a 5x. And I know that sounds very privileged, not even a 5x. It feels like way more than that. It almost feels like 100x, right? Maybe from its lowest low, 29. Nah, it's still like a 20. Not even. 1,000. 1,500%. But if it continues going, let's look up here, 800, 600. And then there's probably one more value if I can pull this out. Let's see the 3. 2,000. Wow. I guess it's possible. Anything's possible. 2,000. Sure. All right, moving on. To corn. This was from last stream, maybe Monday, maybe it was Friday. We were looking for potentially an inverse head and shoulders pattern to play out. If you were here during that live, thank you. You probably remember. Seems pretty good here. The neckline, you could describe it as at 41.8. We have a right shoulder, left shoulder, right shoulder. You could describe it that way. Or again, you could say we have another neckline painting at 43.4. And things are looking pretty nice on that. This is not going too bad here. We have moved down since yesterday. Our high at 43.8. We have traded to 43.7 right before the stream, or the FOMC stream started. Basically looking for a break of that, and I don't even know. Do we have to even update? Do we even have to say it? This is just what everyone's looking for. It's like 46. Our 1618 extension from that high, from our high to low, sitting at 46.9. Our daily closes are up there acting as resistance. Godspeed. Godspeed. To remind you guys, I closed my longs at 48. I've been messing around a little bit, but I haven't taken any serious positions. I haven't reopened longs really. I think I did once or twice, but they got stopped out. I'm pretty much just chilling here. No matter what happens next, whether we move up and we start flying to 60, or we hit 46 and start retracing, into the halving, and we see a boring long sideways period. No matter what happens. Oof, wow, hot. No matter what, no, not no matter what happens. This is just a huge point of contention. This is really kind of the pivot. I don't like, as I said earlier, seeing so many people have the same idea of price action. It's going to go to 46 and it's going to go down into the lower 30s. It just doesn't seem to ever play out that way. Even though that's what I thought would happen. I'm skeptical. I don't think I know. Well, we never know. But right now, I don't even want to throw my hat in the ring at what will happen because it's just such a point of contention. It's a huge pivot. If we can get back above our high from the ETF day, the high is, we're going to see more highs this year. We might move back to the all-time high. We'll see. But if not, we just start what we saw in 2020-ish. We hit a high, or 618 retracement on the chart from our previous all-time high to bear market low, back to 48K, and then we chill, move sideways. Halving happens, and then we move back up, I don't know, the end of the year, something like that. The halving is less than 3 months away, to my knowledge. Wow, I'm smoking. I was on the treadmill. I should start it back up. Get my steps in. I don't know, chat. I'm going to pull the chat up. I want to see what you guys are thinking, feeling. What's going to happen next? I should change the poll. You know what? Live strip. Ugh. There we go. Woo! I'll tell you what, I felt better since I got the treadmill and since I've been standing and not sitting, but I've been sweating. I've been sweating way more. Holy hell. All right. More showers. More deodorant. Bullish on showers and deodorant. All right, man. What's up, autopilot? I know, man. That just blow your mind. Coins chick just sploosh. All right, fam. All right. Good to see you guys. What's up, Michael Kantoric? Start running and give example. I'm walking. I can't run, really. If I run, I won't be able to operate the computer. That's the problem. BMX. We get a 21 higher high and then slow down till after halving. That is very realistic. That is what we were looking for on this channel since before 2023. We were looking for 48K and then down. Back then, people said we were stupid. We didn't know what we were doing. Bitcoin was going under 10K. It was going under whatever. Bottom was in, went to 48K. Went to 49.1. It's like a 1% difference. And now we've moved down. It's scary, guys. It's spooky. It's hella spooky. I don't want it to be true. This is all looking like just too much. Just too perfect. Bitcoin taking a little dive here on the 1 minute. Stocks moving sideways. And the dollar is pausing for a breather, it seems. Let's take a look here. Earlier in the stream, we said price tends to trend one direction. Then when the interest rate decision comes and is published, we tend to see that direction reverse. So far, we've got it. So far, that's exactly what's happened. Bitcoin trended up, interest rate decision, you broke your lows, right? So the good news is a lot of the time with good confidence. Once Chairman Powell starts speaking, whatever reversal we saw after the interest rate decision tends to reverse again, and we usually end up right back about where we started. So it'll be like 43.5. I do expect to see some big wicks. We may see, which we haven't seen in a while, very spicy price action at the end, after Chairman Powell speaks. Once the questions and answers comes, I have this feeling that they're going to rip him to shreds. We will see. If you want to see Chairman Powell get ripped to shreds, can we put a Chairman Powell in chat? Just all caps, Chairman Powell. Or we can do the Chairman Powell emoji. Whatever you'd like. Looking okay, though. Not a huge change. We are very zoomed in for people joining us or not familiar with how we operate here. Not a really damaging sell-off. Bitcoin, when we zoom in, we could see 43 flat, your 0.5 retrace sitting right here at your lower high before you broke it. That'd be fine. No damage done to the chart. Obviously, trading below 42.3 not going to look so hot. That will erase today's gains, and, well, that's not what we want to see. We want to see Bitcoin hold them gains. go. Much better. Much, much better. All right, clocking in. We got 13 minutes, guys. Chirp how 13 minutes. Maybe I should find the stream URL for that. That would be a good idea. Fed live stream. I hope we show up. We don't. Federal Reserve. Here we go. Board of Live Revenue. Here we go. Federal Reserve. Where should we watch it? From their YouTube or from their main site? We'll watch it from their YouTube. Now, I might have ads. No, I have premium. All right, we're good. Let me set this up to be ready. I know I'm ADD as hell right now. I'm just in the ADD zone. Doing my ADD thing. Okay. Not this one. Not that one. Spike. Let's go. Source. There we are. Boom. There it is. There it is. Oh, that's a live feed. You can see cars. I don't know if you guys can see that, but there's like cars driving in the background. I thought that was a still image. They're upping their production game. I like that. All right, Bitcoin continues to kind of predictably slide down here after the interest rate decision came in. No change. That's what the market expected. It's kind of weird to see price action on that. Market had almost 100% chance of that. That's what happened. Dollar rose, stocks dump, Bitcoin making a move to the downside. Yeah, we got like 20 minutes, 10 minutes. And now for real. What's up, Todd Stadler? You getting into any of those launch pads? Nah, dude. I take the conservative, slow, low risk approach to crypto. My philosophy is that Bitcoin and crypto, the upside is huge. We have the upside. No assets seem to appreciate like these do. However, no asset seems to dive and dump like these do. So my path to success has been lower my risk, harness or reap the gains, and avoid taking really big gambles. When I do it with very small amounts. I'll throw, I don't know, like $100 at anything. I don't really care. Some amount that if I put it in there and it goes to zero, I won't lose sleep over it. But I don't really mess around with them. It's not my area of expertise. If you guys are cashing in, making money, more power to you, man. Hell yeah, cheers. Maybe you'll teach me how to do it. What's up, Jake the Snake? Jay-Z, a sure pal. Yeah, Chairman Powell. Too busy looking at Tom. That's right, Mad. How you doing, dude? PayPal cuts 9% of Salesforce. I saw that. Do we have a PayPal chart? I thought I did. PayPal. I know they took a little dump-a-rooney too. Wait. Okay, double checking I didn't lose my chart. PayPal. PayPal Holdings. I know their like CEO is like, we're going to announce something awesome. And then it just dumped. They announced the layoffs. Doesn't seem like tech companies can lay off fast enough right now. This chart looks like hot garbage. This looks like absolute hot garbage. Look at this high, this rounded top. You had a little bounce, but I got sold off instantly. PayPal, I say that, but I can see upside for it in the shorter term. But the longer term, I don't know, man. PayPal, some kind of descending channel. So what do we want to look for? We want to look for a retracement. The low may not be in. It may move marginally lower. But the odds of it doing this, the odds of this happening are not very good. When we see a descending channel, descending parallel channel like this, we almost always start looking for a retracement. And you can even see as this started, we did get lower lows, but they weren't significant lows. They were small percent moves, kind of liquidity moves. I could see PayPal returning up here. Looks like $155. Maybe 125, your little lower high before you fell. From here, that's still a 2x, just to the 0.5. Almost a 3x to the 618. Interesting. I don't know if I have an alert, please. Nope. God, I need to delete some of those alerts. Anyway, what else are we looking at? Great stream as always. Thank you, B4 Crypto, my man. Hope you're doing well. Jay Baker, reclining Powell. Okay. UPS cuts 12,000 workers. Dang, I have this suspicion, guys, that someone got some data, probably some job data, some economic data. We are seeing cuts to jobs quickly. It's interesting. What do you guys think about it? Give me your feedback. I'm reading the chat. What's up, Patriot Caveman, Tau Silv V, Lion in my pocket, my man Pickle, Michael Kantoric. Anyways, going up or down? It's going down right now. Somebody tells me that's going to change in 8 minutes. 8 minutes. What's up, Army Piper, my dude? Poop around it. How you doing, man? RS Crypto, Chris Pax. Slide charts to the left and line up, please. I've done it over and over again. Just every time I do this, it resets. I know, I also obsessively do it. I hate when they're not on. You'll see me do this 1,000 times during the live. There we are. Scam Pal. What's up, Furcan? How you doing, bro? I haven't heard your name before. Scam Pal? Yep. UFO nut. Oh, I hope that's not true. The death of a dog is nothing to joke about. Jonathan Schaefer. Business debt. That will be the economic killer. Just debt in general. I think it's interest payments on the national debt for the U.S. have surpassed the security budget and are like, I believe they are getting close to Social Security. Like, it's huge. Gina! I need you, Gina. I need you in my life. Someday, you'll leave your wife and you'll marry me on your own accord. Dude, this keeps happening. Has anyone else at TradingView just like crash a lot lately? I have no idea why. It just keeps doing that. It's never done it before, maybe last week for me. Now it's doing it all the time. There we are. Bitcoin sliding down, the dollar very much making the other move, and stocks kind of just sideways, actually. Bitcoin's gone to a lower low. Obviously, dollar's gone to a higher high, and stocks hit a low and now are at that low. We might see them dump through that, but I don't see the momentum yet. What's up, Josh Breen? TradingView app sucks. Yes, it does. What do I think about YFI, Guatam Thapa? I don't know, man. I don't know. What about it? You tell me. What's up, Jack? Revy, Optical Art, my man. Steve is drinking. Drinking, my friend. Well, maybe I'll join you. Here you go. You guys, Steve is the man. OpticalArt.com. You know, you're smart for that because that's your website and it's your YouTube name. That's smart. OpticalArt.com. Steve is my buddy. I love Steve. Go subscribe to him, guys. Go subscribe to him. He is the yin to my bullish yang. Love Steve. Good to see you, bro. Who else is here? Let me just read down the list. If you're here today, I want to know it. I see Jack, Adam Buzzard, my dude. Jam not doing too bad, Adam. I just looked at that this morning. What's up? Al's Pond, Bip Lav, BMX, B-Man, Brendan, Butsonator, Cherry, City Bullies, Coins Chick, my darling. Crypto Trading Desk, Do Not Reply, Guatam Thapa, Ghost Vapor. I like that, man. Hopefully you mean like vape, not like vapor, but whatever. Jason Caitlin, Death Burka. This sounds like a hardcore band. Death Burka. What's up, B10X? I saw you earlier. Army Piper, my guy. B Bond, the Lake Bets. Jeremy Ragsdale. Another one of my favorite YouTube channels. Jeremy Ragsdale. Love that guy. Show yourself, brother. Shout out to you. Joe Clank, John Connor, John Johnson, Joker's Wild, Jonathan Schaefer, John Breen, JP Frito, Pure Pecknick, Justin Irwin, Kelly Kellum's here. How are you feeling today, Kelly Kellum? Give us the TA, my friend. Christoph, my guy, Crunk C, Quicker, Lazarus Hand Loading Name, Mad, Marty R, Matthew Barnes, Moggy Games, Michael Kantoric, Money Market Mentor, Mr. Toe, Mr. Crazed, Velazquez, Nathan Roth, Netstar, Nicholas Arena, One a Day, Randy, how you doing, Randy? Revy, Rising Sun, River, Robert Nitz, Robert Young, Row Crypto, good name, man. Samuel Romanoto, Sylview, Stefan Watson, Stefan Warpiehowski, Stick BR, Street Guitarist Sin, T-Bone Tau, Terpene Hunter, Pickle, The Real Pimmer, Tillin McPooch, Token, White Guy, how you doing, Tillin, by the way? Top Kids, TRD Farmer, UFO Nut, Vesco. I know I'm not going to get them all, but we're close. Zen Vibes, Zavin, Little Gav. What's up, Little Gav? Yvonne, the beautiful Yvonne. Vu Lee, my dude, Vu Lee, traveling abroad, one of our patrons. Shout out to you, dude. Good to see you. I know I missed some people. I was going alphabetically. If I missed you, know that I love you. I did not ignore you. If you could, really quick, guys, a reminder, if you haven't hit the like button yet, please do. If you haven't voted in the poll, you haven't put a message in the chat, please do. And if you could, share the stream out on social media. We have 3 minutes until Chair Powell is live here. Tom Powell already talked. And at this point, Chair Powell, it's really just like a just like a tradition for him to talk. We don't really need to hear from Chair Powell. Tom Powell spoke, but we're going to humor him. I'm really interested for those tuning in what the question and answer segment afterwards is going to be like. The Fed, and Powell specifically, has a habit of reiterating how strong and robust the banking system in the U.S. is. And they were saying this even during 2022, when banks were insolvent and falling apart and being seized. NYCB opened with almost a 40% drop today. It traded down to $5.05 from above $10. I know that's a weekly candle, but it is just today. It's going to be very interesting to see what kind of questions they have and to see if they still have that confident rhetoric about banks. Why is your bank dropping 50% in a day? I don't know. I actually don't know what the news or whatever it is behind it. I just saw the chart and thought it was hella spicy. I still don't have an alert. Facts, bin, infographics, hawkish. Oh yeah, you guys feeling hawkish or dovish, man? What do you think? Subscribed just for the nameless reading. Thank you, Ghost Vapor, man. It's a skill. It's not easy. Your trading view's been freezing up. The mine has been awful. Just absolutely garbage the last few weeks. After Powell speaks, we'll drop further. Well, here is our typical FOMC guide. We went over this earlier. It is playing out, at least so far. And that is when the FOMC starts. Well, no, go back into the day of the FOMC, which is today. Bitcoin is either trending up or down, typically. Today it was trending up. We said typically we look for that move to reverse when the interest rate decision is published, which is what we've seen actually. After that, when Chair Powell speaks, we very commonly see price return to exactly where it was. And what this does is it creates a nice big whipsaw, stopping out longs, stopping out shorts, and just whipping liquidity, whipping leverage positions, which is why I always caution you guys to either not trade or be very careful trading. Have very tight stops, I don't know, tight risk management. Stops are relevant, risk management. So we'll see. In 1 minute, we'll see if this reverses, if our FOMC trading plan comes true yet again. And without further ado, Fed Chairman Jerome Powell is joining us live. Hold up. We got audio. Hopefully, while we're waiting, because it'll be a minute. He's always late. He's a player. He's always like a little bit late. Kind of cool guy. While we wait, hopefully we should start a bet really quick. Who thinks we'll see protesters? Who thinks Jerome Powell will swear? Who thinks they won't have the data? It's too late. We got to jump in.
Good afternoon. My colleagues and I remain squarely focused on our dual mandate to promote maximum employment and stable prices for the American people. The economy has made good progress toward our dual mandate objectives. Inflation has eased from its highs without a significant increase in unemployment. That's
inflation
very
is
good
dovish.
But inflation is still too high. Ongoing progress in bringing it down is not assured, and the path forward is uncertain. I want to assure the American people that we are fully committed to returning inflation to our 2% goal. Restoring price stability is essential to achieve a sustained period of strong labor market conditions that benefit all. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. Over the past 2 years, we have significantly tightened the stance of monetary policy. Our strong actions have moved our policy rate well into restrictive territory, and we've been seeing the effects on economic activity and inflation. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. I will have more to say about monetary policy after briefly reviewing economic developments.
You have the data, sir.
Recent indicators suggest that economic activity has been expanding at a solid pace. GDP growth in the fourth quarter of last year came in at 3.3%. For 2023 as a whole, GDP expanded at 3.1%. bolstered by strong consumer demand as well as improving supply conditions. Activity in the housing sector was subdued over the past year, largely reflecting high mortgage rates. High interest rates also appear to have been weighing on business fixed investment. The labor market remains tight, but supply and demand conditions continue to come into better balance. Over the past 3 months, payroll job gains averaged 165,000 jobs per month, a pace that is well below that seen a year ago, but still strong. The unemployment rate remains low at 3.7%. Strong job creation has been accompanied by an increase in the supply of workers. The labor force participation rate has moved up on balance over the past year, particularly for individuals aged 25 to 54 years, and immigration has returned to pre-pandemic levels. Nominal wage growth has been easing and job vacancies have declined. Although the jobs to workers gap has narrowed, labor demand still exceeds the supply of available workers. Inflation has eased notably over the past year, but remains above our longer run goal of 2%. Total PCE prices rose 2.6% over the 12 months ending in December. Excluding the volatile food and energy categories, core PCE prices rose 2.9%. The lower inflation readings over the second half of last year are welcome, but we will need to see continuing evidence to build confidence that inflation is moving down sustainably toward our goal. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. The Fed's monetary policy actions are guided by our mandate to promote maximum employment and stable prices for the American people. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. We're highly attentive to the risks that high inflation poses to both sides of our mandate, and we're strongly committed to returning inflation to our 2% objective. Over the past 2 years, we have raised our policy rate by 5.25 percentage points, and we've decreased our securities holdings by more than $1.3 trillion. Our restrictive stance of monetary policy is putting downward pressure on economic activity and inflation. The committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue the process of significantly reducing our securities holdings. We believe that our policy rate is likely at its peak for this tightening cycle, and that, if the economy evolves broadly as expected, it will likely be appropriate to begin dialing back policy restraint at some point this year. But the economy has surprised forecasters in many ways since the pandemic, and ongoing progress toward our 2% inflation objective is not assured. The economic outlook is uncertain, and we remain highly attentive to inflation risks. We are prepared to maintain the current target range for the federal funds rate for longer, if appropriate. As labor market tightness has eased and progress on inflation has continued, the risks to achieving our employment and inflation goals are moving into better balance. We know that reducing policy restraint too soon or too much could result in a reversal of the progress we've seen on inflation and ultimately require even tighter policy to get inflation back to 2%. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess the incoming data, the evolving outlook, and the balance of risks. The committee does not expect that it will be appropriate to reduce the target range until it has gained greater confidence that inflation is moving sustainably toward 2%.
When is that?
We will continue to make our decisions meeting by meeting. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. we at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to our questions.
Gina Smiley from the New York Times. Thanks for taking our questions. Obviously, in the statement and just in your remarks there, you note that you don't want to cut interest rates without greater confidence that inflation is coming down fully. I wonder, what do you need to see at this point to gain that confidence? And as you make those decisions, how are you weighing recent strong growth in consumer spending data against the sort of solid inflation progress you've been seeing?
Sorry, say that last part again.
How are you weighing the growth data and consumption data, which have been surprisingly strong, against inflation data?
Okay. So what are we looking for to get greater confidence? Let me say that we have confidence. We're looking for greater confidence that inflation is moving sustainably down to 2%. Implicitly, we do have confidence and it has been increasing, but we want to get greater confidence. What do we want to see? We want to see more good data. It's not that we're looking for
more
better
good data.
It's, we're looking at continuation of the good data that we've been seeing. And a good example is inflation. So we have 6 months of good inflation data. The question really is, that 6 months of good inflation data, is it sending us a true signal that we are in fact on a path, a sustainable path down to 2% inflation? That's the question. And the answer will come from some more data that's also good data. It's not that the 6 month data isn't low enough. It is. It's just a question of, can we take that with confidence that we're moving sustainably down to 2%? That's really what we're thinking about. In terms of growth, we've had strong growth. I mean, if you take a step back, we've had strong growth, very strong growth last year, going right into the fourth quarter. And yet we've had a very strong labor market, and we've had inflation coming down. So I think, whereas a year ago we were thinking that we needed to see some softening in economic activity, that hasn't been the case. So I think we look at stronger growth. We don't look at it as a problem. I think at this point we want to see strong growth. We want to see a strong labor market. We're not looking for a weaker labor market. We're looking for inflation to continue to come down as it has been coming down for the last 6 months.
And I'm sorry, if I could just follow up very quickly. When you say that you want to make sure that it's a true signal, is there anything that you're seeing in the data that makes you doubt that it's a true signal at this stage?
No, I think I would say it seems to be the likely case that we will achieve that confidence, but we have to achieve it, and we haven't yet. And so, I mean, it's a good story. We have 6 months of good inflation, but you can, and you know this, you can look behind those numbers and you can see that a lot of it's been coming from goods inflation, for example, and goods inflation running significantly negative. It's a reasonable assumption that over time, goods inflation will flatten out, probably approximate zero. That would mean the services sectors would have to contribute more. So, in other words, what we care about is the aggregate number, not so much the composition, but we just need to see more. That's where we are as a committee. We need to see more evidence that sort of confirms what we think we're seeing and that tells us that we are on, gives us confidence that we're on a path to a sustainable path down to 2% inflation.
Nick.
Gina,
Nick Timrose
again,
of the Wall Street
please.
Journal. Chair Powell, it seems to me you raised rates rapidly over the last 2 years for two reasons. One was the risk of a wage price spiral. Two, there were risks of inflation expectations becoming unanchored. This morning's ECI report for the fourth quarter shows private sector payroll growth running at a sub 4% pace. Inflation expectations are very close to where they were before the inflation emergency of the last 3 years. And given that you appear to have substantially cut off these two tail risks, and that you've judged here today current policy is well into restrictive territory, what good reason is there to keep policy rates above 5%? Are you really going to learn more waiting 6 weeks versus 3 months from now that you have avoided those two risks?
So, as you know, almost every participant on the committee does believe that it will be appropriate to reduce rates. And for partly for the reasons that you say, you know, we feel like inflation is coming down, growth has been strong, the labor market is strong. What we're trying to do is identify a place where we're really confident about inflation getting back down to 2%, so that we can then begin the process of dialing back the restrictive level. So overall, I think people do believe, and as you know, the median participant wrote down 3 rate cuts this year. But I think to get to that place where we feel comfortable starting the process, we need some confirmation that inflation is in fact coming down. Sustainably to 2%.
If I could ask differently, if you hold rates high as inflation moderates, as it has been, target rates will exceed the prescriptions of the Taylor rule or experience. What would be the reasoning for holding rates higher than the levels recommended by those rules in the current instance?
Well, look, I think, as you know, we consult a range of Taylor rules and non-Taylor kind of rules. We consult them regularly. They're in our teal book, and they're in all the materials that we look at. But, you know, I don't think we've ever been at a place where we were setting policy by them. And they're, depending on the rule, it will tell you different things. There are many different formulations. Another way to think about it is, implicitly, is so in theory, of course, real rates go up if holding all else equal as inflation comes down. But that doesn't mean we can mechanically adjust policy as real rates, as inflation comes down. It doesn't mean that at all, because for one thing, we don't know. We look at more than just the Fed funds rate. We look at broadly financial conditions. But in addition, we don't know with great confidence where the neutral rate of interest is at any given time. But that also doesn't mean that we wait around for to see the economy turn down, because that would be too late. So we're really in a risk management mode of managing the risk, as I mentioned in my opening remarks, managing the risk that we move too soon and move too late. And I think to move, which is where almost everyone on the committee is in favor of moving rates down this year. But the timing of that is going to be linked to our gaining confidence that inflation is on a sustainable path down to 2%.
Howard.
Hi, thanks, Chair Powell. I'd like you to key in on the use of the word in the statement that inflation still remains elevated. You've pledged to cut rates before inflation reached 2%. So that implies that there's some sort of intermediate step here on inflation, and that a cut would be consequent with a change in the statement language that inflation remains elevated. What's the step down from there?
Yeah, I don't want to answer that.
We worked out the particular statement language and that kind of thing. I would just say, if you look at where 12-month inflation is, and it's still well above core is 2.9%, for example, 12 months, which is way down from where it was. Very, very positive development, very fast decline, and the case is likely that it will continue to come down. So that's where it is. But we're wanting to see more data.
So if I could follow up on that, the statement allows that you want greater confidence on inflation falling before you cut, but it doesn't mention the other side of the mandate, a slide in employment. Would a slide in employment also bring you to the point of cutting rates? Yes.
So let me say that we're not looking for that. It's not something we're looking for. But yes, if you think about, in the base case, the economy is performing well, the labor market remains strong. If we saw an unexpected weakening certainly in the labor market, that would certainly weigh on cutting sooner. Absolutely. And if we saw inflation being stickier or higher or those sorts of things would argue for moving later. In the base case, though, where the economy is healthy and we have ongoing growth, solid growth, we have a strong labor market, we have inflation coming down, that's what people are writing their SEP around. And in that case, what we're saying is, based on that, we think we can and should take advantage of that and be careful as we approach that question of when to begin to dial back restriction.
Gina, again, please.
Claire Jones, Financial Times. Just to circle back to the greater confidence aspect of the statement, there's been a lot of unanimity in recent meetings. I'm just wondering, going forward, when it comes to all needing greater confidence, is the unanimity, or at least consensus among FOMC members, about what the threshold for that greater confidence is? And if not, could you maybe tell us a little bit about the discussion today on what the variations between FOMC members was on what constitutes enough confidence to cut rates, and also if there was any variation on how quickly that greater confidence threshold could be reached? Thank
So
you.
we're not really at that stage. You know, there was no proposal to cut rates. Some people did, you know, talk about their view of the rate path. I would point you to the SEP as you know, as good evidence of where people are, although it is one cycle later. So, you know, we're not at a place of really working out those kinds of details because we weren't actively considering, you know, moving the federal funds rate down. I will say there is a wide disparity, a healthy disparity of views, and you see that in public statements, in the minutes and the transcripts when they're released every 5 years. So we do have a healthy set of differences, and I think that's actually essential for making good policy. We're also able to reach agreement generally because we listen to each other, we compromise, and even though not everybody loves what we do, they're able to, for the most part, able to join in. To me, that's a well-functioning public institution.
Rachel.
Next FOMC
Hi,
March.
Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. So over the past few years, there have been all these real-time indicators that helped us gain a sharper understanding of where the economy was, like open table data or office attendance. You've talked about vacancies in the past. And I'm wondering at the start of this year, what might be on that dashboard for you that's giving you the clearest picture of the economy, including on rents, if you could touch on that.
Including?
Rent costs.
Yeah.
No, I cannot. Next question.
Well, so we're not, you know, it's not the pandemic, so we can actually rely on more traditional forms. People are working, they're getting wages, and the economy is largely reopened and is broadly normalizing, as you see. So I wouldn't say we're looking at that sort of more innovative data as much. You know, you point to rents, so of course we follow the components of inflation very carefully, which would be goods inflation. I talked about that a little bit.
Price of a
You
cotton
mentioned housing
gin.
inflation. So
You know, normal stuff.
the question is, when will these lower market rents find their way into measured rents as measured in PCE inflation? And we think that's coming, and we know it's coming. It's just a question of when and how big it'll be. So, but that's in everyone's forecast, I would say. So that will help. But at the same time, we think goods inflation will probably, it's been giving a lot of disinflation to the effort, and probably that declines over time, but it may well have some more time to run. You know, the supply chains are not perfectly back to where they were. In addition, it takes time for the healing process to get into prices. So there may be still a tailwind. We'll find out with that. So we look at the things that relate to our mandate very carefully, and as you would imagine.
I guess just as a quick follow-up, do you feel comfortable at this point saying the economy has reached a soft landing, or is that part of looking for more confidence?
No, I wouldn't say we've achieved that, and I think we have a ways to go. Inflation is still, you know, core inflation is still well above target on a 12-month basis. 12 months is our target. Certainly, I'm encouraged, and we're encouraged by the progress, but you know, we're not declaring victory at all at this point. We think we have a ways to go.
Steve, optical art.
Thank you, Mr. Chairman.
How'd you get there, Steve?
You've said that you would know the neutral rate by its works. So I'm wondering what you could tell me. How do you believe the neutral rate is working? We're telling you right now that growth is stronger. In other words, how much is the economy really being restrained right now by the current funds rate? And how much restraint does it really need additionally if inflation is still coming down?
So I think you do see in the interest-sensitive parts of the economy, you do see, for example, housing, you see the effects, you do. Your second question, though, really, I think is important, and that is a lot of this has come through, a lot of the disinflationary process has come through the healing of supply chains and also of the labor market. So you've seen that other set of factors is really different from other cycles and has brought that, working with tighter policy, which has enabled the supply side to recover, I think is that mixture has been behind what has enabled this. So no, we really do think that we're having an effect broadly across the economy. I would point to the interest-sensitive parts of the economy as well as spending generally. But it's a joint story. It's a complicated story.
But how much restraint are you actually imparting to the economy, would you say, relative to the neutral rate?
So I think it's of course, you know that it's not something you can identify with any precision, but a standard approach would be to take the nominal rate, 5.3%, let's say, and subtract sort of a forward measure of inflation. If you do that, and there are many, many ways to calculate that neutral rate, but that's one I like to do. And you're going to get to something that is materially above mainstream estimates of neutrality, of the neutral rate, you will. But at the same time, you look at the economy and you say, this is an economy that grew 3.1% last year. And you say, what does that tell you about the neutral rate? What's happening, though, is the supply side has been recovering in the middle of this. So that won't go on forever. So a lot of the growth we're seeing it isn't just a tug of war between interest rates and demand. You're getting, more activity because of labor market healing and supply chains healing. So I think the question is, when that peters out, I think the restriction will show up probably more sharply.
Thank you, sorry.
No one's going to ask about New York.
Thanks for taking the question, Mr.
Central
Chairman. You mentioned earlier we're not seeking a weaker labor market, I think that you said. Can you talk a little bit more about that? Do you think the labor market now is back to quote-unquote normal, and that
That's me in like 20, 30 years.
achieve the inflation target without wage gains coming back down to what they were pre-pandemic? Even with today's ECI levels, they were still above those pre-pandemic levels.
I think the labor market, by many measures, is at or nearing normal, but not totally back to normal. And you pointed to one or more of them. So I think job openings are not quite back to where they were. Wage increases rather are not quite back to where they would need to be in the longer run. I would look at it this way, though. The economy is broadly normalizing, and so is the labor market. And that process will probably take some time. So wage setting is something that happens. It's probably will take a couple of years to get all the way back, and that's okay. That's okay. But we do see. You saw today's ECI reading. The evidence is that that wage increases are still at a healthy level, very healthy level, but they're gradually moving back to levels that would be more associated, given assumptions about productivity, are more typically associated with 2% inflation. It's an ongoing process, a healthy one, and I think we're moving in the right direction.
So that process can continue without a weakening of the labor market, basically, you're saying?
Well, I think the labor market I don't know if it's rebalancing. Clearly, there was a fairly severe imbalance between demand for workers and supply at the beginning of the pandemic. So we lost several million workers at the beginning of the pandemic from people dropping out of the labor force. And then when the economy reopened, you remember 2021, you had a severe labor shortage, and it was everywhere. Panic on the part of businesses, couldn't find people. So what's happened is we expected the labor market to come back quickly, and it didn't. And 2022 was a disappointing year. And, we were kind of thinking, well, maybe we won't get it back. And then 2023, we did, as you know. So labor force participation came back strongly in 23, and so did immigration. Immigration came to a halt during the pandemic. So those two forces have significantly lowered the temperature in the labor market to where it's still a very strong labor market. It's still a good labor market for wages and for finding a job, but it's getting back into balance. And that's what we want to see. And one great way to look at that is what's happening with wage increases. And you see it now across the major things that we track. It isn't every quarter, but overall there's a clear trend, still at high levels, but back down to what would be consistent with where we were before the pandemic and with 2% inflation.
No one's gotten them.
Hi, Chris Rugaber at Associated Press. Thank you. I wanted to follow up on Rich's question. It sounded like you suggested that you're not worried about faster growth so much. So wanted to see if you're seeing anything that suggests that inflation could reaccelerate from here. And it sounds like you're saying you're not worried that solid growth from here on out poses any risk to inflation. Thank you.
No, I think that is a risk, the risk that inflation would reaccelerate. I think the greater risk is that it would stabilize at a level meaningfully above 2%. That's to me more likely. Of course, if inflation were to surprise by moving back up, we would have to respond to that, and that would be a surprise at this point. But I have to tell you, that's why we keep our options open here and why we're not, rushing. So I think both of those are risks, but I think the more likely risk is the one that I mentioned, which is you've had 6 good months, very good months, but what's really going to shake out here? When we look back, what will we see? Will inflation have dipped and then come back up? Are the last 6 months flattered by factors that are one-off factors that won't repeat themselves? We don't think so. We don't. That's not what we think. But that's the question we are asking. We have to ask, and we want to get comfort on that.
And just one quick follow-up. Governor Waller had mentioned the revisions that are coming on February 9th for the CPI data. Is that something you're watching as well? And if we see those revisions fairly minor, is that going to give you more confidence where things are going?
We'll just have to see.
Yeah,
we'll look at
know.
those.
I don't even know why we
Last
do
year
these.
was
I don't answer any questions. I don't say anything.
a surprise.
We'll find the data, though. Where's the data? Anybody have the data? The data.
Michael
Where's the
McKee,
data?
Bloomberg Radio and Television. If you don't want to use the term soft landing, would you say at least that from your point of view now, the other scenario of a hard landing caused by the Fed is off the table, or the risks have diminished very much? And you mentioned below 2% inflation on a 3-month basis. Core PCE has been running at 1.5%, and there are those on Wall Street who think that if you maintain the level of restriction you have right now, you could end up with inflation running below your target. How do you see that?
So your first question, how to describe where we are. So I guess I would just say this. Executive summary would be that growth is solid to strong over the course of last year. The labor market, 3.7% unemployment, indicates that the labor market is strong. We've had just about 2 years now of unemployment under 4%. That hasn't happened in 50 years, so it's a good labor market.
Is that the
And we've
data?
seen inflation come down. We've talked about
Isn't that the
So
data?
we've got 6 months of good inflation data and an expectation that
Good
there's more to
data.
come. So this is a good situation. Let's be honest. This is a good economy. But what's the outlook? That's looking in the review. The outlook, we do expect growth to moderate. Of course, we have expected it for some time, and it hasn't happened. But we do expect that it will moderate as supply chain and labor market normalization runs its course. The labor market is rebalancing, as I mentioned. Job creation has slowed. The base of job growth has narrowed. And of course, 12-month inflation is above target and getting down closer to target. Is not guaranteed, but we do seem to be getting on track for that. So those are the risks and questions we have to answer. But overall, this is a pretty good picture. It is a good picture. Your second question was, sorry.
Could you get inflation that is below target, end up with inflation below target, and you have to do something about that?
So the thing is, we're not looking for inflation to tap the 2% base once. We're looking for it to settle out over time at 2%. And the same thing is true. If we have a month or two of lower, and we have that now, of inflation that's annualized at a lower level, that wouldn't be good. We're not looking to have inflation anchor below 2%. We're looking to have it anchor at 2%. So if we do face those circumstances, then we'll have to deal with that. I think as of now, the question, we want to take advantage of this situation and finish the job on inflation while keeping the labor market strong.
Edward Lawrence from Fox Business. Thank you, Mr. Chairman, for taking this. So as I've heard from some district Fed presidents, is it, in your view, a little premature to think that rate cuts are right around the corner? And then when we do see that first rate cut, should we interpret that as the beginning of a rate cut cycle, or is it a one-off?
So I'll point you to that language on your first question.
I won't answer you.
We included that
ever.
language
Stop asking.
in the statement to signal clearly that with strong growth, strong labor market, inflation coming down, the committee intends to move carefully as we consider when to begin to dial back the restrictive stance that we have in place. So if you take that to the current context, we're going to be data dependent. We're going to be looking at this meeting by meeting. Based on the meeting today, I would tell you that I don't think it's likely that the committee will reach a level of confidence by the time of the March meeting to identify March as the time to do that, but that's to be seen. So I wouldn't call, when you ask me about in the near term,
Right.
I'm hearing that as March. I would say I don't think it's probably not the most likely case or what we would call the base case. Then your second question is
Is this the start of when we see a cut, is it the start of a cutting cycle, or could it just be a one-off?
That's going to depend on the data. The whole thing is this is
data.
going to depend on the data. We're going to be looking at the economic data as it affects the outlook and the balance of risks, and we're going to make our decisions based on that. And it could wind up, we'll have another SEP at the March meeting, and people will write down what they think. But in the end, it's really going to depend on how the economy evolves. We talked about there are risks that would cause us to go slower. For example, stronger inflation, more persistent inflation. There are risks that would cause us to, or if they happened, that would cause us to go faster and sooner, and that would be a weakening in the labor market, or for that matter, very, very persuasive lower inflation. Those are the kinds of things. So we're just going to be reacting to the data. That's really the only way we can do this.
Victoria.
Why do we ask questions if you just say nothing?
Hi,
and
Victoria
data?
Guido with Politico. Could you talk a little bit more about productivity growth? You've mentioned multiple times about, the level of wage growth that's consistent with 2% inflation. We've obviously seen, you were talking about ECI this morning, in which it's cooled a little bit, but still sort of above what you wanted to see. Growth has been very strong. How much of those numbers do you attribute to productivity? And do you see that productivity as sort of just
Well, darling, I'd love to tell you, but we don't have the data.
temporary because of the factors, the labor and supply chain factors you were talking about, or do you think that productivity growth will fade over time?
So this is a really interesting question, and I think my own view is, I think if you look back to the pandemic, you saw a spike in productivity as workers were laid off and activity didn't decline as fast. And then you saw a deep trough of productivity. And then over the last, you saw high productivity last year in 23. I think we're basically in the throes of getting through the pandemic economy. And the question will be, what is it that has changed? The productivity tends to be based on, fundamental aspects of our economy. Is there a case, will it be the case that we come out of this more productive, more on a sustained basis? And I don't know. What would it take? It would take, people talk about AI, but my guess is that we may shake out and be back where we were, because I'm not sure I see work from home doesn't seem like it's a big productivity increaser. AI, artificial intelligence, generative may be, but probably not in the short run, probably maybe in the longer run. So I'm not seeing why it would, but right now, I would say the productivity is kind of what falls out of the broader forces that are driving people in and out of the labor force and activity returning and supply chains getting fixed.
Right, so would that be behind why we've seen such strong growth, but we've also seen inflation fall, that maybe there's just a higher level of productivity
That's
right
one
now?
way to look at it, yeah.
Nancy.
Hi, Chair Powell. Nancy Marshall-Genzer with Marketplace.
Chair Powell, drink.
I want to ask a little bit more about housing. I'm wondering, how closely are you watching rent and housing prices as you evaluate whether and when to cut rates? And it seems like housing prices are not coming down as quickly as you expected.
So when we think about, our statutory goals are maximum employment and price stability, and that's what we're targeting. We're not targeting housing price inflation, the cost of housing, or any of those things. Those are very important things for people's lives, but they're not, those are not the things we're targeting. We're also well aware that when we cut rates at the beginning of the pandemic, for example, the housing industry was helped more than any other industry. And when we raise rates, the housing industry can be hurt because it's a very interest-sensitive sector. On top of that, we have longer run problems with the availability of housing. We have a built-up set of cities, and people are moving further and further out. So there hasn't been enough housing built, and these are not things that we have any tools to address. But where it comes into play very specifically in our work is inflation, which is a combination. It's really rental inflation. You're taking owner's equivalent rent and then actual rent paid by tenants, and you're running that through the CPI calculation or the PCE calculation, the one we look at. And what that's telling you is that market rents are increasing at a much lower rate or even being flat, and that will show up in inflation over time. It has to, as long as that remains the case. So.
And just real quick, what is your response to the letter that was sent to you by some members of Congress asking the Fed to lower interest rates to make housing more affordable?
My response is what I started with, which is that our job, the job Congress has given us, is price stability and maximum employment. Price stability is absolutely essential for people's lives, most importantly, not most importantly, mostly for people at the lower end of the income spectrum who are living at the edges, at the margins. And so for someone like that, high inflation, in the necessities of life, right away you're in trouble, whereas even middle-class people have some scope to absorb higher costs. So we have to it's our job, it's what society has asked us to do, is to get inflation down, and the tools that we use to do it are interest rates. So that's how we think about that.
Ugly.
Courtney.
It's ugly.
Courtney Brown from Axios. Can you give us some insight into whether the committee discussed the possibility of slowing balance sheet runoff in the months ahead?
Yes. So I would start by saying that balance sheet runoff so far has gone very well. And as the process has continued, we're getting to that time where questions are beginning to come into greater focus about the pace of runoff and all that. So at this meeting, we did have some discussion of the balance sheet, and we're planning to begin in-depth discussions of balance sheet issues at our next meeting in March. So those questions are all coming into scope now, and we're focusing on them. But we're at the beginning of that process, I would say.
Quick follow-up. Is it the case that the Fed would decide to lower rates and make adjustments to the balance sheet runoff in tandem?
Yes, we do. We see those as independent tools, and so they don't. For example, if you're normalizing policy, you might be reducing rates but continuing to run off the balance sheet. In both cases, that's normalization. But from a strict monetary policy standpoint, you could say we're loosening in one with tightening. So that could happen. It's not something we're planning or thinking about, but right now we're thinking about getting to a place where we're going to see the balance sheet runoff to continue. We're watching it carefully, and as I said, we'll be looking into that as a committee starting in March.
Thanks.
Simon Urbanovich with The Economist. Thank you, Chair Powell. You've mentioned 6 good months of inflation data, but that not being enough to build up confidence. Based on your previous response that your base case is you probably wouldn't start easing yet in March, the implication is that 8 good months might not be enough either. Roughly how many months do you think you might need of good inflation data to be confident?
Yeah, I'm not in a position to put a number on it. I'm just going to say.
I couldn't tell you. I don't know.
It's not that we don't have any confidence. We have growing confidence, but not to the point where we feel like it's a highly consequential decision to start the process of dialing back on restriction, and we want to get that right. And we feel like the strong economy, strong labor market, inflation coming down, it gives us the ability to do that. We think that's the best way we can serve the public, because ultimately we've made a lot of progress on inflation. We just want to make sure that we do get the job done in a sustainable way. That's how we're thinking about it. In terms of when that'll be, that'll all come out of our communications, and we won't keep that a secret.
Hi, Chair Powell. Evan Reiser with M&I Market News. Can you explain a little bit more on what you're considering when tapering QT? Do you need to see the overnight reverse repo facility all the way down to zero, or is it something that you can start with a couple $100 billion there?
Not a decision that we've made, but I wouldn't think we wouldn't be taking a position that it's got to go to zero. I mean, if it were to stabilize at a different level, but that's not a decision that we've made. That's what we'll be talking about at the March meeting. A whole range of issues will be briefed up in the committee. We'll get into all of the issues that will be arising over the course of the next, let's say, year or so.
Greg.
Thanks, Greg Robb from Market Watch. Chair Powell, I want to change gears a little bit. In the presidential primary campaign that's been going on for the last 9 months or so, your name has come up often, and many Republican candidates had said that they probably wouldn't want to give you a third term. So I wanted to give you a chance to talk about that. Do you want another term? You've had on the Fed. What's your stance on that?
I don't have a stance on that. It's not something I'm focused on. Focused on doing our jobs. This year is going to be a highly consequential year for the Fed and for monetary policy, and we're all of us very buckled down, focused on doing our jobs.
Jennifer.
Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. As you mentioned, core PCE has been running at 1.9% over the past 6 months, and you guys are actually expecting core inflation higher this year at 2.4% compared to that 6-month measure. Given that forecast and that the median is for 3 rate cuts this year, what happens if inflation stays where it's been over the last 6 months for the next 6 months?
So we'll update our inflation forecasts at the next meeting. You referred to the December meeting. That's 3 months old, so it might be lower now given the data we've gotten. So look,
the data.
As I mentioned, we're going to be reacting to the data.
Except for when they ask.
If we get very strong inflation data and it kicks back up, then we'll go slower or later or both. If we got really good inflation data soon, that would matter for both that would tell us that we could go sooner and perhaps go faster. So we're just going to be, but of course we'll weigh that with all the other factors. We're setting policy based on the totality of the data.
But just to follow, if inflation stays where it is currently, that would probably mean that the real interest rate becomes more restrictive. Would that mean you'd have to trim more, perhaps, than you already have factored in?
I like the way she
think
talks.
if we came to the view that that inflation that the 6-month inflation numbers, which are very close to 2, were in PCE world, if we came to if we thought that is really where we're going to be, then yes, our policy would be in a different place. It would. But that's the whole point, is we're trying to get comfortable and gain confidence that inflation is on a sustainable path down to 2% or toward 2%.
Daniel.
Hi, Chair Powell. Daniel Avis, Agence France-Presse. I just wondered if I could get your comment on the recent consumer confidence data. It seems to suggest that consumers are sort of moving towards a much more optimistic view of the economy. I just wonder, is it fair to say that they're moving towards where the Fed appears to have been in recent months? And do you think that inflation and falling inflation perhaps has played a role in that? And what challenges do you see going forward? Thank you.
Yeah, so it's been interesting that confidence surveys have been weak at a time when unemployment has been low, very low, historically low for a couple of years. But nonetheless, that's been the case, and we've asked ourselves why that is. And one obvious answer, we don't pretend to have perfect wisdom on this, but one obvious answer is that the price level is high. So prices went up much more than 2% per year for a couple of years, and people are going to the store and they're paying much more for the basics of life than they were 2 years ago, 3 years ago, and they're not happy about it. And it's fine that inflation's coming down, but the prices they're paying are still high. So that is what that has to be some part of why people are unhappy, and they're right to be unhappy. This is why we need to keep price stability. It's why we need to do our jobs, is so that people don't have to deal with things like this. In terms of you're right. In recent surveys, you've seen a couple of significant increases in consumer confidence or happiness with the economy. I guess that's a good thing. That can support spending, can support economic activity. There's some evidence of that. But you're right. It is a fact that we have seen a meaningful increase. I think levels of confidence are still maybe not as high as they've been at various times, but they certainly have come up.
Thank you for taking our questions. Brian Menace, CNN Business. Committee members have said they'd like to meet with business leaders and stakeholders in person to learn more about the economy in real time, given that some data are subject to large revisions, the issue of seasonal adjustments being thrown off balance, and many readings of the economy being quarterly. So did any members say they've learned anything not yet reflected in the data, or have you yourself learned anything through anecdotal evidence that hasn't been captured in the data yet?
Well, yes. I'm a big believer that yes. So we do meet with outside groups who come from all different parts of the economy. And I always feel like I spent most of my life in the private sector looking at companies, individual management teams, and then building out from that. And so starting with GDP data and working into what's actually affecting people's lives is challenging. It's very hard. So I really like anecdotal data. In addition, as you know, the 12 reserve banks have really the best network of anyone, that in all their districts, they're talking to, not just the business community, but the educational, medical, all nonprofit community. They have arms into all of that. And so when they come back, that's what goes into the beige book. But that they come back, and what each Reserve Bank president does is, during the Outlook go-around, they'll say, in my district, and they'll talk about 100 conversations. They won't talk up. They will give you input based on 100 conversations that they've had with people of all different walks. And I personally find it very helpful in understanding what's going on. And also, I think you hear things before they show up in the data sometimes.
Did any of them notice slowing economy based on what they've heard from their district?
Yes, I mean, if you look back at the last, not this beige book, but the one before, there was a lot of slower activity. I think that what you're hearing now is things are picking up a bit. You're hearing, not in every district and not every person that we talk to, but you're overall, it feels like you're hearing things picking up at the margin. So that's what comes through.
Talking about data. Last question, guys. Nobody's
Thank you,
hit
sir.
him hard.
Jeff Cox from CNBC.com. Just kind of looking to put it all together. You talked about basically the economy looking strong. We had 3.3% annualized growth in the fourth quarter. Does the strength of the economy speak more loudly to you now than any inflation threat might? That you're in a position, in other words, to keep rates elevated as long as the economy stays strong, and you're more tilted towards that. And also, perhaps, are you worried at all that the economy is maybe a little too strong right now and that inflation could come back at some point?
I'm not so worried about that. It's again, we've had inflation come down without a slow economy and without important increases in unemployment, and there's no reason why we should want to get in the way of that process if it's going to continue. So I think declining inflation, continued declines in inflation, are really the main thing we're looking at. Of course, we want the labor market to remain strong, too. We don't have a growth mandate. We've got a maximum employment mandate and a price stability mandate, and those are the two things we look at. Growth only matters to the extent it influences our achievement of those two mandates. Thank you very much.
You are not welcome, Chair Powell. Wow. So that was something. I really was hoping we'd get some hard-hitting questions about banks, especially about the New York Central Bank, as it fell 45% today, something like that. To wrap it up, Bitcoin moving exactly as we predicted with our pre-FOMC into interest rate decision, into Chair Powell speaks. However, since then, we have gotten a sell-off. We're moving lower. I was looking for a retracement back up to this, 1 minute order block. Maybe I should have zoomed out a little bit. Just about 43K, but maybe that's having the brakes put on it here. The dollar showing some strength. This volatility was very high for an FOMC, especially one where nothing happened. Very weird. Dollar opened strong, fell off right after he started speaking, and then moved to a new high over the last, half an hour. Stocks mirroring Bitcoin pretty closely. Down overall. Gold, I think, was kind of the one-off and then joined suit, mirroring stocks very closely. God, he started off really kind of bullish, kind of dovish, and then didn't answer anything. This man talks about the data all the time, constantly talking about the data. Today we heard a new term, good data. Never heard that before. He's never said that. That's a first, at least to my knowledge. Good data. But apparently he doesn't have it. This guy always talking about data, always. You come to him and you say, yo, man, where's that data at? And he says, I don't have any. It's like a shady drug dealer or something. Real weird. Real strange. Or like your broke friend, always talking about money. And then you're like, hey, man, do you have some money? He's like, no, I don't have any money. Ridiculous. But it was still a hell of a stream. And I do thank you all for joining. We do have another FOMC, so we don't have one in February, which is interesting. We're going to skip over February. The next FOMC gonna be March 20th at 2 p.m. and we're going to be here live. We looked at this earlier. It was 50-50 basically on the interest rate for the next FOMC, and that's 5 to 2.5, 2.5 to 5.5. And those probabilities are going to mix up between now and then, but we've got a whole month, and that sucks. I'm going to miss you guys. If you just tune in for the FOMC, that's dope, and I love you. Keep that up. Consider jumping in and joining us on our regular daily streams. The best way to do that, subscribe, enable notifications, join the Discord where you'll get notifications no matter what, even if YouTube shadow bans us. It's worth it. Hey, you know what, guys? I need to learn to stop doubting myself. Look at that. The minute I was like, well, maybe we're going down lower, moving up to the target. A lot of good price action calls on the live today. Check out the Patreon. We have our Patreon night Friday. Again, we've had a bunch of new members, and I love it. It's great to see people investing in themselves. If you got questions, join the Discord. That's going to be all, fam. That's going to be all. I'm going to join Optical Art and having a little drink, maybe. The FOMC day drink. Actually, last note, it was interesting. Chair Powell is an older man. He is a boomer. And in the past, he has stumbled over words before, as we all do. Even I've done during this live stream. However, today I did notice he had trouble with a lot of words. It's unusual. I'm not making fun of him. Never make fun of someone for stuttering. But a little interesting. It's interesting. We've watched this guy for years. And today he had trouble with words. We'll find out what's going on. Is he nervous? Maybe signs of aging? I don't know. Anyway, guys, stay bullish. Stay bullish. I'll catch you guys on Friday at the latest. If we get a spicy move, I'll be live later today or tomorrow.